So today I put a poll on the YouTube channel asking if you want to see a review of earnings from Microsoft and Google after they bought them out yesterday, and them stocks have tanked huge. It's also led to the NASDAQ crashing huge today, and we're going to take a look at that as you guys voted for this as the video for today. The other one was the Hook Group, or the THG. I do terrible when companies rename themselves. I always call them by the old name. Even today I still call Block Square and Meta Facebook. So yeah, just another one to add to the list there. But you guys voted to look at Microsoft and Google, and we're going to take a look at what's going on in these earnings because the stocks are down huge, and that's leading the NASDAQ to be down quite a bit as well. So let's get started. So there's actually quite a few companies that reported earnings that I could have talked about, but obviously these two take the headlines because they're the two that are going down huge. As always on the Patreon, I will do a big review of earnings that reported this week towards the back end of the week. So if you're on Patreon, wait for that exclusive video and I'll cover everything on there. But today we're going to talk about Google and Microsoft. Now these two stocks are down quite a bit today. You see here Google is down 7%. It was a little bit lower at one point. And Microsoft is currently down 6%. And same again, that was actually down even more at one point. Now, if you look at the indexes, you'll see here the Dow is actually up 0.2%. The S&P is actually only down 0.4%. And I don't know about you guys, but today my portfolio is actually doing quite well. I think that helps with DraftKings having a pretty good day and adds on to the good run that we've been on. But the standout is when you look at the NASDAQ. NASDAQ's down 1.88% today. So this is a massive disconnect to what's going on here. So what is going on here with the NASDAQ? Why is this down so much? Well, the thing is the same reason why the index is held up so well is Google and Microsoft. Before we had the crash, that is, Google and Microsoft have such a heavy weighting in these indexes. And that's why the indexes weren't really showing a crash because, until about November time, because the stocks like Microsoft were holding up so well. As soon as Microsoft started coming down, that's when we saw the indexes coming down massively as well. And this is what happens because these stocks massively control the weighting in these indexes, especially something like the NASDAQ, for example. When we look here at the NASDAQ, basically, Google is obviously the top holding, and in second place, you'll see that we've got Microsoft in the second place, and we've got Alphabet or Google making up third and fourth place with the different classes of shares there. And between Microsoft and Google, they hold nearly 20% of the weighting of this index here. And I think, in fact, the top 8 in this index actually holds about 50% of the weighting. So when you've got obviously two heavy weightings of the indexes, and both of them stocks are down 7% today, and the other one's down 6%. This is why the NASDAQ's getting dragged down massively because of the heavy weighting of these stocks, and that's why the NASDAQ's looking so much worse today than these two indexes, and why you actually might be having a pretty okay day today, but the NASDAQ looks absolutely terrible. So first of all, let's get stuck into Google. 1 trillion market cap company, now trading at 18 times earnings. Looking at their earnings, I saw their earnings and I was like, oh, they were okay. They weren't terrible for me, but they weren't good, and I can understand why the stock got hit a little bit today. When you look at the EPS was a miss. It was quite a big miss on the EPS, and revenue as well was a 1.5 billion miss here, and you can see that the revenue was up 6% year over year. Now, first of all, it came out with a line that we're going to see from a lot of companies this quarter, and that was talking about the impact of the strong dollar and how that really affected them. And you can see here straight away, they said that the third quarter revenues were actually up 11% on a constant currency basis. But obviously because of the strong dollar at the moment, they were up 6%. So this is what you're seeing from a lot of businesses at the moment, is the massive impacts that the strong dollar is having on the businesses. And you look at 11% growth, and I'd actually say, if Google grew at 11%, and that would actually mean there would be. It's a tricky one to look at. Do you look at the point of view of like, yeah, actually 6% isn't that good, or do you look at it from 11% point of view and go, that's actually pretty good, and maybe in the longer term this issue will be resolved or balanced out, and that was actually pretty good revenue growth. We'll see what happens here. Now, also the big thing was the massive drop in operating income. You can see this had a massive drop, as you can see here, and also the operating margin was down. So we'll have a look here in a minute. Now, the big standout thing is when you look at the YouTube ads were down massively on Google. You can see there was a decrease here. Personally, for me, I've seen this last quarter was the worst ad rate that I've been personally paid on YouTube. So I had a bit of a feeling that this was going to happen. Now, actually into this month, October, I've actually had the strongest ad payments for a very long time. So that was a bit of a positive, but I think one thing that did really stand out, if you go listen to the conference call is they were actually saying a bit of negative information regarding going forward. They said that this is going to continue, but personally that's something that I've seen. Google network was down, Google advertising was up slightly, Google Other was pretty flat, Google Services was up a good amount, and Google Cloud was still growing at really good rates. And you'll see Other Bets was doing okay as well. So you can see here that Google has basically been hit by the economic environment out there, where it's happening to the likes of Snapchat when they reported potentially receipt with Facebook. And this earnings report makes me a little bit worried for when we do get Facebooks and the likes of Pinterest. There's a lot of slowdown of spending in advertising, and this was mentioned in the conference call actually, and it's affecting the business, as you can see here. And you'll see here there's a big drop in the net income. The reason why research and development had a massive increase, as you can see here, and general and admin was a little bit flat. Now, a lot of this was to do with employing people. Now, Google actually did say in the conference call that they are going to reduce the amount of people they're actually going to be employing in Q4. So we will see this reduced. So that was a massive increase that potentially we see a bit of a slowdown here. Obviously, you've got the weakening dollar, but another big swing here was the other income, as you can see here. Previously, that benefited them by 2 billion here, and it actually was a negative nearly 1 billion here. So that was also a 3 billion swing here. So you can see here, this is where there was a lot of the swing through the research and developments, the sales and marketing, and also the other income, which you probably see very similar to the likes of PayPal that mentioned this at the moment, and Shopify. Obviously, with a weakened stock market and environment out there, there's a lot of things that have been decreasing in value, and that's what's hit Google there at the moment. And it's worth going to listen to the conference call because there's a lot of good information in there. This was the confirmation that I just mentioned about that the headcount is going to be significantly lower than Q3. They also mentioned that they're going to be improving and starting the monetization of shorts, which is having a lot of the growth at the moment. And you're seeing this with the likes of Meta, for example, trying to battle away with TikTok and the monetization of this. And Google and Meta are in the same place where they're trying to monetize this short revenue to this kind of scale that they've had previously. And this was also a part where they talk about the weakness in advertising at the moment and how that's affecting them. They also pointed out that the biggest decreases they've seen are in the financial services. So we saw a pullback in the insurance, loan, mortgage, and crypto subcategories. So basically, one of the big weakest categories out there is the financial space at the moment, which we know about what's at the moment going on. Obviously, there's a lot of negative stuff in the market at the moment. That's led to a lot of financial services pulling back, and that also, you know, what I was saying earlier about someone that has financial content on YouTube, I saw that impact in Q3, and that all kind of makes sense at the moment. So my overall thoughts with Google is that it was just an okay quarter. I think it wasn't obviously a good quarter. I don't think it was a terrible quarter. I think obviously they're getting impacted by what environment we're in at the moment. Obviously the stronger dollar hit them a little bit, and also they've not really slowed down any of the investments into the business as much as say other companies, and obviously that hurt the profitability a little bit at the moment. For me, I do look at Google in the long term and think the long-term picture here hasn't changed for it. It's still, in my opinion, you know, the YouTube's still going to be successful, the cloud's going to be successful, the search engine and the advertising business will come back once we move into a better economy. I think these were just okay earnings, but I can understand why there is a drop going on at the moment. So for me, this doesn't really change my long-term picture in Google. And if anything, if I do get the opportunity for this to go lower, and what it is doing now, entering the $90 range or even that $80 range, it doesn't really change my opinion on Google, and I'll just be happy to pick Google up at a better valuation. So yeah, overall, this doesn't really, not a great quarter, but it doesn't change my opinion that much. And if I can, I'll try pick some of these shares up at cheaper value, as long as the long-term picture stays as good as what it is at the moment. And then that leads us on to Microsoft. So Microsoft at the moment is a stock that I own. I think it's a bit of a rich valuation for where I can personally pick it up. So if it does go lower, I will not mind that to happen. But obviously, Microsoft is nearly down as much as what Google is. The difference with Microsoft is I looked at their earnings and actually thought they were okay. I thought Microsoft earnings were pretty strong. I would give them a good 8 out of 10. And if you look at the EPS was a beat. The revenue was a beat as well. When you look at the revenue, like I said, it was up 11%. And same again, another company mentioned this FX impact that's happening, and they would have actually been up 16%. So that's pretty impressive. Operating income as well was up 6% and also up 15% on constant currency. But you'll see that net income was down or decreased 14%. So we'll take a look at what's going on in there. So the business itself, obviously Microsoft has a lot of moving parts, potentially the Activision deal as well coming into this business at some point. But you'll see Microsoft Cloud was still driving forward with a lot of growth here. A few people were a little bit spooked because I think it came in a little bit lower than what was expected. But I still think this is fantastic growth, so I'm happy with this. And obviously there will be some impacts at the moment with the slowing economy that we do have. You'll see that Office was still pretty strong. LinkedIn was still putting in strong growth at 17%. You'll see Azure, the main cloud driver, was up 35%. And you'll see the massive kind of decreases in like a lot of the gaming and PC content. And obviously the reason why a lot of that is decreasing is because it's had such a boom because of the CV times. And obviously that's having a bit of a catch up from the boom in the CV times. We saw this mentioned with like Logitech, for example. Also the same sort of things apply to like Corsair, for example. So yeah, there's no shock in this kind of area. You know, this is what we've seen from Nvidia as well. You know, they've been warning about a lot of slowdown in this sort of market. So yeah, we've seen this from many other companies here. But apart from that, I thought everything else was pretty good growth. Obviously, a few people looked at the cloud being a little bit weak. I still thought the numbers were pretty good. And when we have a look at the operating income, you can see here that it was an increase on the 3 months from last year. You'll see though, the reason why the net income was massively down is because provisions for income tax. If you look here, you'll be able to see that that was a 4 billion impact compared to last year, which was a 19 million. So that's what was the massive decrease in this earnings report here. So yeah, overall with Microsoft earnings, I thought they were pretty good earnings. I thought the growth was strong, especially when you take the FX impact in as well. Obviously, most of the income was increasing, or the operating income was increasing good rates. Most of the business was moving quite well. I was happy with the cloud, even though it was a little bit slower than what was expected. Obviously, the big weakness that we're seeing is obviously to do with the PC and the gaming market, which is what we're seeing everywhere at the moment. It's not a Microsoft problem. And yeah, I think for Microsoft to still be putting in these sort of numbers in this sort of environment was a very, very good quarter from them. So I was actually really surprised to see it down so much. And I guess the reason why it's probably down is maybe that cloud numbers that was a little bit weaker than was expected maybe spooked it, because that's supposed to be the growth driver. Maybe because it's a bit of a richer valuation and it hasn't crashed as much as what other stocks have. Maybe that's why it's coming down a little bit more. But yeah, I thought it was good. The only annoying thing is it hasn't, even though it's down today, it's not down enough where I would buy it. That's the only thing. So I mean, if Microsoft carry on doing these numbers and it does start entering that teen P ratio, I'll definitely look at considering and buying some. So we'll see if that happens there. So yeah, overall I'll give Google maybe 4 or 5 out of 10. Microsoft I thought was a solid 8 out of 10. I thought their earnings were pretty good and probably don't really justify the sell-off that they're having today actually. So that's a quick look into those earnings. Hope you enjoyed the video as always guys. Smash the like button if you're new around here, subscribe, and I'll catch you in a bit.